Okay, guys, so as you'll see there on the screen, so you can get the chat room up on the Speak Up app. The room key is there. The room key is 15435. If you just pop that in to the find an existing room, or it will say something like that on the Speak Up app, then you'll be able to find me there, and you can post any questions as you're watching live in that chat box. From there as well, you'll be able to let me know if you want me to look at specific markets, specific time frames, or anything else like that, and kind of direct me as I go. I'm obviously here for you guys. Want to make sure you get the best out of it. Okay, so I'll leave that QR code at the top there so you can scan it and download the Speak Up app if you need to, and you can pop the room key in. But otherwise, let us also just make sure that we bring up place where you can go if you have any questions. So tradewithufos.com/Becky will take you to, let me just put the camera on here. Hello. So it will take you to this webpage. Now from here, straight away, you've got a question and answer forum, and you can just pop a question in. So let's say, for example, obviously last time showed auto climate. You might have a question about that. You pop it in and search, and then you'll see that there are questions about what the role of ATR is in auto climate. How does it assist with market analysis? What components are displayed? What's the role of it? Other elements. So how to profit from a falling market, all of those kind of things. So you might have questions about different elements of trading in general, or different elements of the way we do things. And you can use this link here to find the answers that you might have, or the questions that you might have the answers to them in this forum type area. Now from this link as well, again, the link's on the screen there, tradewithufos.com/Becky. You can book one-on-one coaching with me if you'd like to. You've otherwise got apps and courses and general coaching that you can look into. You can check out our trading schedule. If you've already got courses, then this is what you can also use up here to log in. If you scroll down a little bit more, you'll see some information on different platforms that we use, the apps that we use, the platform that we have, and I'll use that today. And I think that's it actually on this screen. So go there if you have any questions. If you're watching recorded, if you're with me live, then by all means use the Speak Up app. I will be keeping an eye to see what questions you have or which markets you want me to look at. Okay, speaking of, let's get started, and let's first look at some currencies. So we're going to look at some spot forex opportunities. I'm just looking here to see where we're at. This is very small time frames, that's probably why. So this was some trades that we put on a while ago on small time frames. It would take me a long time to search back. So I'm going to look at a daily on the left-hand side and a 55 on the right-hand side for the opportunities that we're looking at here. I'll tell you for why. So for me personally, I would much prefer to be trading the spot forex market on slightly longer timeframes, so swing trading timeframes. Now, other people might very well do better on smaller timeframes or prefer smaller timeframes or even much bigger timeframes. I'm not here to say which is right or wrong. It's just what works for you based on your time that you're available, your psychology. Can you watch your money go up and down quickly, or do you prefer to do it over a longer period of time? For me, I tend to prefer things over a longer period of time, more passive. So we're going to look at a few different currencies. First of all, we're going to come to FX Street. Just ignore that for now. Look at their economic calendar. We're going to look at high impact news across major markets. So high impact news will give us an idea of potentially which markets we want to be a bit careful of. So for example, tomorrow we have news coming out that may have a high impact on the US dollar and on the Aussie dollar. Thursday, we have news coming out that may affect the euro and may affect the US dollar. So you have different ways you can interpret this. Again, depends on you as a trader. Neither one is right or wrong. You will have pros and cons to each. It's up to you to decide what works best for you and maybe to test it as well to see what works best for you with data. So you could, if you're taking the risk tolerant side, You could ignore this entirely and you could trade whatever you want as much as you want. Trade the US dollar, trade the Aussie dollar, trade the euro dollar, multiply them, take multiple trades on the euro dollar, multiple trades on the Aussie dollar if you wanted. Bear in mind that what that would mean is that if the high impact news comes out and creates volatility, you may well take a fair few more stop outs than others might take. It may mean that the volatility works in your favor and you take a lot more winners than other people would take, but you're taking more of the risk. The other extreme is, if I know there might be news that affects these currencies in the next few days, I don't trade any of them at all. So I trade only, for example, pound yen, New Zealand Swiss. So none of these that are listed here. You could choose to do that. Somewhere in the middle, which is where I tend to be, somewhere in the middle is to say, okay, I need to be aware that these markets may have some issues. So what I won't do is trade the euro dollar or the Aussie dollar or the euro Aussie. So I won't trade currency pairs that have both of them in. But I might trade the pound dollar or the euro yen or the Swiss Aussie, whatever, Aussie Swiss. Now, another way is that you could say, I will trade these, but I'll only place one of each, right? One trade that's got the dollar in it, one trade that's got the Aussie in it, rather than multiple trades. Or you could say, I'll trade all of them, but I'm just going to reduce my risk. So maybe 0.5% instead of 1% on the markets that are going to have a little bit more volatility. Those are your options. For me, for the purposes of this video, is I'm going to look at different markets. I will avoid the euro dollar, the Aussie dollar, and the euro Aussie. But otherwise, I'll look at any trades and I will place them. It's up to you to decide if you want to go that little bit more conservative and not trade any of these at all, or if you want to ignore it entirely and be a little bit more risk tolerant. Okay, so those that might be here with me live, let me know that you're with me. Let me know that you're in the room. Let me know if you have any questions or any markets you want me to look at. Otherwise, I'm going to dive straight in. So we're going to ignore the euro dollar. We'll start. Let's look at the pound dollar. I prefer to look at some majors to start with. Okay, so I'm not going to explain too much about the process or about what each of these elements are doing. Assuming that you've already watched some of our videos, you understand a bit about what we're doing. You've also got the courses, which are fairly cheap, to be honest, to be able to understand how these things work. Feel free, again, if you have questions, if you are watching this for the first time, you don't know what I'm talking about. If you're watching recorded, go to that tradewithufos.com/Becky. Ask me a question here. I'll answer it. Or if you're with me live, let me know now. Okay, so let's just take that off so we can see more what we're doing. I'll take that off as well, just for now. Alrighty, so straight away, we're not going to trade the pound dollar on this market because we have gone past what is usual in terms of a move to the downside. That's what this data here is telling me. So let's do pound. Let's do dollar yen, actually. We'll do dollar pairs first. Okay, straight away, we're not going to look at the dollar yen because it's got an unconfirmed climate. We will look at the dollar Canadian. Again, unconfirmed climate on this time frame, so we're just going to move on. Let's look at the New Zealand dollar. Unconfirmed climate, and the dollar Swiss. We've been going up for longer than is normal on in an upwards trend. So again, we're going to avoid this one. So now we're going to start looking at cross pairs. Again, just to slow this down a little bit, I'm looking at auto climate here to make this decision, nothing else. At this point, I don't care about the UFOs here, don't care about the UFOs here, only auto climate. Fine. Expand that out a little bit. Only auto climate is something that I care about at this point to be able to tell me, do I even take this a step further? And so far, auto climate has consistently been telling me unconfirmed climate or we are overextended. So rather not look at it. Okay, let's look at a couple of cross pairs. Let's look euro yen. Okay, downwards climate here looks to be the start of a move. So that's more useful. Let's now see where we're at here. Quite a way to go before we hit any buyers. So looking good so far. So step one as far as the euro yen is concerned, is checked. We've got confirmed probability downwards. We're going to look to go short if we can see that there's an opportunity. I'm going to cycle through different timeframes on the right-hand side to see if there's an opportunity. I'm going to look at 3 or 4 different timeframes on the right. If we don't get an opportunity, fine, we move on. Hopefully we will. Let's see. So the EMA is at 157.94. I'm just going to draw that on the chart to make this really visual, really easy to find. So it's 157.94. Alrighty, so we need a red UFO on the right-hand side that coincides with this blue line. That's what we're looking for. As we can see, we don't see anything on the 55-minute chart at the moment. This UFO is just ahead of this. Now, to be fair, as price moves up, if it moves up, the EMA is likely to also move up, and it may well coincide here. At the moment, it's not close enough for me to want to place a trade on this. You might, if you want to, place alerts to see that if price gets closer, does the EMA line up with the UFO? If so, you'd place the trade. If not, you just wouldn't. But for now, I'm going to look and see if we have a different opportunity on a different time frame that might work out more to our favor. Okay, so I've tried an hourly chart, nothing there. 30-minute chart, nothing there. Also going to try a 144. And nothing there either. I'm surprised that this isn't showing as UFO, but fair enough. Okay, so no opportunity here. We do have probability down, but we don't have any sellers at the right areas in order to increase our probability. So we will move on. Okay, let's keep looking through. So let's look, say, we won't do Euro Aussie. Let's do Euro Pound. I'm going to Ireland soon, so ideally I'd like to see it's go in my favor. Okay, so unconfirmed climate, nothing to do here. Let's look maybe at the pound yen. Something similar as we saw in the euro. Looks like we took a trade here before. Let's delete that. Okay, this one I'm actually more excited about, the pound yen short, than when we looked at the euro yen, for a couple of reasons. Number one, neither of those are on the list of high impact news articles that might come out. We also have a set of sellers just ahead of us, just above us on the bigger time frame. So that's always useful to coincide in that way. So the EMA is at 184.13. Actually, by the looks of it, already within the daily. So we may well take this as just the daily chart, but let's see if we have any other coincidings. Now we do have some coincidings here. Literally just on the 144 minute, we have this dark red UFO, meaning it's already been touched, but still there, still have sellers there. As price moves up, EMA will move up a little bit, likely still within that UFO. So I'm just going to see if we have any different opportunities, but for now, we do have one on the 144, and we may well take it. Okay, so on the 60-minute, we have one that's starting just ahead of us, 1 pip ahead of where the EMA is. So pretty much the same level. It combines 2 UFOs together there up to 184.46. So I'm going to do is look at the 144 again. 184.46. It's the same area. So whether we take it on the 60 or the 144, we're looking at the same area. On the 55, doesn't go up to the same level. So we'd be more likely to be stopped out. And then we'll have a look just quickly at the 30. Same situation there. Okay, so we're going to take the 144 minute. Alrighty, so apologies to those who use fibs as they were intended to be used. I use them as a drawing tool. Again, you might want to layer fibs on top of this if you are a fib trader. For me, I don't use them in that way. Doesn't mean that they're not valuable. It's just not what I use. But I'm going to use them here as a drawing tool just so it's clear to see where our entry and our stop would be. So what I've done here is I've taken the UFO numbers. We're going to take the lowest number as our entry. We would have rounded it down, but it's already at a round pip. So it's 184.13. Our stop loss would be 184.466, rounded up to 47. Add 5 pips to 52. Gives us some wiggle room. Add a couple of pips for the spread is 54. There we go. So our entry and stop very clearly there. Our target, our final target is going to be all the way down here at 175.769. We're going to round that up and we're going to add a couple of pips. That's our final target there. Our safety target is always 1-to-1 away. So let's bring that up. Where's my order panel gone? Am I being blind? Can't see my order panel. It was here a minute ago. I just closed it out. Where would it be? Okay. I mean, we can do maths manually if we need to. But ideally, I'd still like to place the trade. I must be going blind. So we had... Where am I at with this? Data window help center settings. Let's do that. Some positions. Okay, we'll do a little bit of maths manually for a second then. Might restart this to bring up my order panel. Okay, so let's just bring up a calculator. So we have 184.54 minus 184.13. So that's the distance between our entry and stop. That's how many pips we are risking. So that is 41 pips in this case. 0.41 is the total, but 41 pips. So all we need to do is make sure that our safety target is 41 pips away from our entry. So we're going to take that 41 pips minus 184.13 takes us to 183.72. So our safety target we know is 1-to-1 away. Now, I don't know what's happening to have got rid of my order panel here. Maybe it's that. There it is. There it is. Lovely. So we are now going to place this trade. Now, some of you, when you watch my colleagues, might see them use these sticky notes. So let's bring up a sticky note here, just so that we've got this nice and pegged on the side that we can use here. So already. So we are looking at the pound yen. We're going short. The entry is 184.13. The stop loss is 184.54. The safety target is 183.72. And the final target, which I can just about see there, is 175.79. So we're just going to fill this last bit in here. So entry, 184.13. Stop loss, 184.54. So we are risking there, like we said, 41 pips. And if we were to risk 1,000 units, so 1 microlot, then we are risking $2.79 per microlot. Which means if you wanted to have 2 targets, then you would be risking £2.79 on each of them. Overall, oh, sorry, $2.79. Overall, $5.58 of risk. Now, I'm just going to assume that we want to take $100 risk in total, just because it's a nice round number. Again, you guys pick what you're risking. The profit target, 183.72, so it's 41 pips away. So we're, in this case, risking $50 to make $50 for our first target. I'm going to make sure it's in for, let's do good till date. Let's do a month. Wasn't quite a month. There you go. We'll do a month, risking $50 and sell. In it goes. Okay, second half of the trade, 184.13. Stop loss is the same. Profit target is the 175.79. So that is, if we were right in this, a 20-to-1. The 20-to-1 on one half of the trade, a 1-to-1 on the other half of the trade. Overall, that's like 10-to-1-ish, 9-ish, 10-ish to 1, if we were right on both counts. The likelihood is that we won't hit 20-to-1. There is a chance, that's why we're putting it in. More than likely is the price doesn't go in our favor for that long and we take profit somewhere in between, but we have that profit target there waiting just in case we are right and it goes that far in our favor. So we're risking $50 again. So you're risking $50 in this case to make 1,017. Time in force, already got that in. And there we go. Okay, so that's the second half of the trade on. If I squidge this down, you'll see all the way down at 175. There it is. So as I was saying, this is the trade we put on today. And we were looking at a 1 day, 144 minute. So feel free to snapshot that so that you can remember for later. Obviously, if you're watching recorded, then you've got it there. You can pause it, go and look and see if the trade is still valid at the time that you're watching. Does it fit your trade plan or not? What we'll do now, let's just move this out of the way for now. What we'll do now is just talk about what will happen if price goes a little bit in our favor, but then changes. So after we hit our first target, we may well see that new red UFOs form, right? So we end up with new sellers that come along. After each new set of sellers, we could move our stop loss behind it. So if price comes against us, it stops us out at a small profit. Another thing that we could do is keep an eye on the auto climate. As soon as the auto climate changes to anything but confirmed down, we get out. So if it changes to unconfirmed, get out at whatever profit that is at market. If it changes to a blue dot of any kind, get out at whatever profit or maybe slight loss it is at that point. One other option that we have is that if we know, and we can see here from the data, price usually goes down, going to round this up, 6 candles in a row. Then once we get to the end of the 6th candle, so the end of the 6th day, so 3 more trading days from now, end of that day, close it out. Because you've now reached what would be a typical movement to the downside. Different ways to play it, you could just leave it, right? What will be, will be. Again, that's going to be the more risk-tolerant version. The more, what would be the word, conservative, would be to apply all of these, right? So I'm going to make sure that I trail my stop behind it, and I'm going to keep a time stop, right? If it gets to the end of that 6th day, I'm going to get out of it, providing the auto climate hasn't changed in between. Okay, so that's our first trade, which is forex. We're now going to move on to look at some stocks opportunities. I'm just going to place a little note here. I like to do this because it keeps it nice and clean. So placed on the 12th of September, 1 day, 144 minutes. Okay, so it just makes it easier for me to see what I did in future. Okay, so let's look at, I'm going to come to top now, Predictive Options Planner, to look at some stocks opportunities. So I tend to look at forex opportunities, stock opportunities, and crypto opportunities, providing we can find them. Sometimes we can't find them in one or the other. Again, you'll notice that it's pretty much the same thing, right? We are doing the same application regardless of the platform we're using, regardless of the timeframes we're using, and regardless of the markets we're looking at. We're still letting auto climate help us decide if we want to place that trade in the first place. And we're using auto UFOs to help us decide where specifically, or if there's not actually an opportunity. So what I'm going to do, just to make this nice and clean, is I'm going to maybe copy that. Add another window in. I'll add a chart in, I guess. That's what I'm trying to do. Okay, so I'm going to bring another chart in. I was going to try and make it, just copy and paste it so that I had a white background on each side, but it doesn't really matter considering what we're using it for. Don't want to play about too much with the, Okay, don't want to play about too much with the settings here. For some people, they love that black background. For me, it like plays with my eyes, but we're only looking at auto climates. That's all that matters. Okay, so we're going to look first at what the US market is doing as a whole. So we're going to look at US markets. We're going to look at the ES, which is the continuous futures contract that represents the S&P 500. That is the top 500 US stocks. Okay, so in general, on a weekly chart, we're going to go a little bit longer term here. Again, for me, with stocks, I would say we either want to position trade, so much longer term, or we want to day trade, just based on the fact that each day we're likely to get a gap, which if you're using smaller time frames and holding it overnight, that can be when you end up getting stopped out at much greater distances than you chose to initially. Again, that's my preference because I'd rather avoid that risk. You're welcome to take it if it fits within your trade plan. Alrighty, so in general, on a weekly chart, the US market didn't know what it's doing. We've got an unconfirmed auto climber here. You can see there it's a thin red dot, unconfirmed. Now, we're also pretty much at the EMA, so let's just add that. So moving average, we'll do it purple, why not? And we want it to be an exponential and a 9 EMA. Okay, so pretty much, as we can see, we are at the EMA, just slightly above it. So what that means is we may be in position with other stocks that make up the S&P 500, where we have opportunities quite close by in terms of we want to be trading at that ideal trading price, the EMA. But we might have some indecision in terms of whether or not the stocks are going up or down. So we're going to use our matrix here to help us. So we usually look for stocks to buy, but today, since the market as a whole is undecided, I want to look for some opportunities potentially to short, and then we'll look at buying opportunities if we've got time. Alrighty, so let's just make sure we're looking at all the right filters and features. We're going to do confirmed down, near 9 EMA, stocks and ETFs. Nothing, nothing, it would appear. So let's do hopeful. So looking at all US stocks, so all symbols, all stock symbols, we're only doing the one scan. We're looking at all US stocks across stocks and ETFs. Any stocks between the prices of $5 and $300 that have, I might have other things ticked potentially. Earnings within the next 5 days, because that increases some volatility. Okay, thank you, Trade Session. So yeah, all we're looking for here is any US stocks that are confirmed down in the weekly chart. So probability downwards on the weekly chart that don't have earnings within the next 5 days. And we literally have, I was going to say nothing because it came up with nothing, but it must have just not scanned before. So we've got opportunities. I was going to say that would be shocking that across all of those potential stocks in that bucket, we wouldn't see any that have probability down. So I'm glad maybe I just didn't click the button hard enough. Okay, so we're going to look at stocks that have probability here to the downside, and I'm just going to click through them. Might be my internet here that's slowing this loading, which potentially means those that are watching, this might be a video that's a little bit jumpy if I've got bad internet, but we'll see. Again, if you have any questions, if something is jumping around and you're not quite following, again, feel free to just let me know. Okay, straight away, not going to look at this market, at this stock, because we have this 1.16. So the EMA is further away than we want it to be. We basically want that to be less than 1. I'm going to actually come back to here and go back to sensible as well. I went to hopeful thinking that that would be our potentially only way to get some opportunity, but looks like it was just a loading thing. Okay, let's look at the next stock. Alrighty. So if we've got weekly on the left, which is what we're going to use for the kind of decision making, whether or not we even take it to the next step. So for example, this one, thick red dot, probability down, 0.29, so reasonably close to the EMA, happy days. We're going to look at a 3-day, a 2-day, a 1-day, and a 144 on the right-hand side to find an opportunity. So let's just scoot that over a second. Just going to put a line here. Okay, so this is a 5.37. In fact, let's do a different line. Let's do extended line. Okay, nice. Whoops. Let's grab this. There you go. So we want this to be at 5.37. Okay, so just going to move that up, 5.37. So we're going to look through different timeframes and see if we have a red UFO around this mark. It looks unlikely, to be honest, because price has already been there very recently. So if there were any sellers there, it's likely the price took that out. But let's see. Nothing there. Okay, no worries. We will look at a different market. So this is what we're doing, right? We are just going through, seeing if we have opportunity. If it is objectively there, we take it. If it is objectively not there, we don't. And that's it. Take it through our process, take it through our methodology, and make the decision in a very clear way. Now, this actually looks like we've got an unconfirmed climate on the weekly, so we don't want to be taking that any further. Should be. Might have only just changed. Okay, so let's look at the next one. Alrighty. So, usually goes down for 9 candles. We're on the 7th. Okay. EMA is at 8.29. So kind of there, just about. Move that up a little bit. There we go. So we're looking for sellers around this mark. So might be something in there. If it were, looks like took out a little bit there. Maybe on smaller time frames, we might find something in there, but we're looking at bigger time frames today. All right, nothing there. Okay. And we'll just keep doing this until we find one. I think I've yet to have a session where I've gone through all of them and not found something. But hey, we are at the mercy of the markets. They show us what they have. If they don't have it, they don't have it. Okay, so 6.54, we may well have an opportunity here. Okay, so 6.54 is, of course, just underneath this UFO here, which may well be actually the one that we take. Or actually, maybe we won't. So the final thing I'm looking at here is if we find an opportunity that lines up, do we have decent probabilities for it? This is saying 46.15. Ideally, we want that to say 50% minimum. So on the 3-day chart, we wouldn't take this trade. On the 2-day, it's actually lined up slightly nicer anyway, over 50%. So if we don't find a better opportunity, we will take the 2-day. With the 1-day, we have better probability, which is good. We have UFOs that are overlapping each other, meaning that we might actually want to go in at market. What I might do in this case is actually just take the higher UFO, the one that has the EMA within it. Let's have a look at the 144. Whilst that's loading, let's put UFOs on this side. Yes, we'll do 0.5. Okay. Just to see where our target would be. Doesn't look like there would be any. Do a trailing stop then for our second target. Okay, so it looks like the daily is where we have the best probability. So let me pull up a little sticky note with our stocks on. Okay, just a reminder, I'm just going to put this up here for a second. Those of you that might have questions that you are watching recorded, you have the link there, tradewithufos.com/Becky, to go and find answers to questions in the chat forum. You can post your own question there, which I will answer. You can look for other resources, some of which are free, some of which are paid for. It's obviously whatever your preference is. for things that might be able to help you. Okay, so this stock trade is ADPT. Earnings for this stock, we will use, let's look, open this up here. We're going to use TradingView to more easily find this out. ADPT. ADPT. Stocks. Same again here. Place the trade on TradingView as well. Just find it much easier. Again, some of you might use other platforms that you find easier. Again, you do you on that. But I'm going to use TradingView just to place this trade. So let's have a look at the earnings. Let's see if we add it here. Events, earnings on chart. Yeah. So I can't see. Oh, here we go. Earnings. So the next earnings date is Tuesday, the 14th of November. So let's bring up, where was it? Here it is. November 14th. Okay, so we've got basically a couple of months before we might see volatility based on earnings in this stock. Hopefully we're out of the trade by then. If we're not, then you'd evaluate it at that time. Am I deep enough into profit that I want to cash out a little bit now, leave the rest on the table? Am I hovering near my stop loss anyway, or near my entry anyway? So in which case I'd rather just get out, take the small loss or take the small profit and not risk that it gaps past me. Again, that's going to be up to your risk tolerance and the way you feel about those things to make sure that you are enacting a methodology and a consistent strategy that aligns with something that you're comfortable with. If it's not aligned with something you're comfortable with, you won't do it consistently, basically, is the point on that. Alrighty, so we're going short. The entry is, so this is one of the cheaper stocks, 6.41. What this should mean is that those that have maybe smaller accounts, add 10 cents to that. Those that have smaller accounts will be easier to get in. For those that have bigger accounts, you might need to put in a lot more, go short for a lot more shares. You might choose that it's too cheap for you, might choose that it's too expensive for you. Again, that's up to you. The methodology is the same. So the example that we're looking at hopefully is still giving you an idea of what you would do on another stock that maybe does fit your trade plan if this one doesn't. Alrighty, so we're going to go 7.06 as the stop loss minus 6.41. 7.06, by the way, because I took that higher number, added 10 cents. 65-cent risk means our safety target is going to be 5.76. Okay, the final target, if I remember correctly, final target, there wasn't one. There wasn't any, or there weren't any green UFOs, buy UFOs. Where's my, okay. I'm going to put you over here, bring this back up, and bring you back again. Okay. I know I can do a thing to make it stick to the screen. Alrighty, so the risk per share, we'll figure that out in a second. And our final target, I'm going to put trailing stop. I'll explain that in a sec. So we've got all of this up. Our risk per share we'll figure out, and we're looking at a weekly and a 1 day. So we'll fill this back in a second. We're going to come back to TradingView to do this. Alrighty. So going short, let's bring this back on. At 6.41. Again. Here it is. Okay. Figure this out in a second. Alrighty, so let's bring this back on. Just going to read it from here for a sec because it seems that when I click on it, it comes off and I don't want to faff around, as I would say. So 7.06 is the stop loss, the risk being 65 cents as we worked out. We're going to make that $50 in general. So that's going to be 76. You'd run that down, 76 shares worth on each side of the trade. Just to make sure that we did the maths right, 5.76, as we can see here on the safety target. I'll be able to put something here and stick it, lock it. That might be something that we're doing. Anyway, we'll come back to that in a second. $50, time in force. We're going to have it in for a month. I'm going to click sell. Okay, so that's it. The second half of the trade, same entry, same stop loss. Let's remember that. Risk of $50, so 76 shares again. Take profit. In this case, we don't have a profit target, so we are going to leave that blank. Now, actually, the risk per share, we already know that was 65 cents. So if you were to trade one share of this, obviously you couldn't have two different targets. Then you'd be trading and risking 65 cents per share. Obviously, if you're trading two shares, one on each side, then it would be double that. If you're trading $50 worth, then it's 76 shares. So what we're going to do is we're going to keep that time in force for a month, put that in. So what that means is if price comes in, hits our target, and then moves down from here, if new sellers form, we just drag that stop loss. And or if we start to see that the climate changes to anything other than confirmed down, there you go, just got into that trade by the looks of it. And or if we reach the end of what would be a typical movement to the downside. So we basically get out not at a predetermined price, but instead based on where we still have probability. If the auto climate is still showing us probability downwards and we've got new sellers forming, we still have probability that price is going down. So we stay in the trade. We trail that stop loss so that if price were to spike up on its way, the bug just flew into my eye. So if price does spike up, then we have the ability to get out at a small profit, even if we don't take it all the way to zero, which hopefully doesn't happen for adaptive biotechnologies. Okay, so we've looked at a forex trade. We've looked at a stock trade. Now, if we bring up these two, so far, these are the trades that we've put on today. These are the symbols that we were looking at. These are the directions we've gone short in both cases. You've got the entry, stop loss, and targets. The stocks one has already gone in. Despite being on bigger timeframes, it just so happened to be very close to current price. It's already triggered. So we'll see what happens, obviously, in the course of time with this. Do we hit our safety target? Does it hit our stop? Are we managing it along the way? With the forex trade plan, hasn't hit yet. So you would just keep an eye on, have things changed that make this trade no longer valid? In which case, cancel the trade. Or is it still valid by the time it triggers? And then where do I manage it from here? What we're now going to do, because we have time to do that, is we will place a crypto trade. So we'll look at some crypto opportunities. I'll get rid of these for now. All right, put you to the side for now. And what we're going to look at is we're going to go to coin market cap. Here. To basically give us a watch list of cryptocurrencies that we can go and have a look at. Now, that those of you that are following cryptos, as is clear in this fear and greed index, reasonably fearful. They have dropped a little bit. A lot of them are obviously very correlated to each other. If one drops, others do at different rates. And you might have some that go up whilst others come down. But generally, that crypto market has been falling more recently. Maybe good opportunities for shorting, might be overextended. We'll see. Let's look at the data. Let's look at the technology that we have to help us out with this. Alrighty, so as always, if we filter by volume, bear in mind that with volume, we want to make sure that we are trading any market that has a reasonable degree of volume, because therefore we are less likely, I'll rephrase it, we are more likely to have a buyer for our sell order or a seller for our buy order. So we're much more likely to get filled at the prices that we want to get filled at if we've got a bigger volume. So Tether, we won't look at Tether just because it's Tether versus the US dollar is what we'll look at on the chart. And it's basically the same. So we'll do what we do a lot of the time, and we'll be looking at Bitcoin, Ethereum. We'll skip the US dollar coin because, again, very similar. we'll look at XRP, and so on until we find a trade that could work. So Bitcoin first, let's have a look at Bitcoin. We'll use the nailing FX thing for that. Okay, that's the forex trade we had on now, but we're now going to look at Bitcoin versus the US dollar. I'm going to look at it on Coinbase. Again, you may choose not to. I'm also going to look at bigger time frames. This was a trade here, looks like that we put on a little while back. Looks like we may well have hit our safety target before we got stopped out on that one. So break-even trade, let's take that off. Alrighty, so on a bigger time frame, we have probability to the downside on Bitcoin. Kind of in the middle here between buyers and sellers. Again, I prefer to look at bigger time frames on Bitcoin because it's a cryptocurrency. It's a little bit more volatile maybe than others. We've seen recent push to the upside here on smaller time frames. We're going to be looking for any sell UFOs around the 27,082 mark. So it jumps quite a lot. That EMA jumping we don't see on other markets. A lot more volatility expected in cryptos. So round about that market. Now saying this, the price does continue to push up, which may encourage retail traders to jump on the bandwagon. It's going to be coming towards an area where we're likely to see sellers from the EMA. And as price moves up, the EMA moves up, actually very likely to coincide with this big stack of sell orders, one on top of the other here. So may well be looking to take an opportunity here on Bitcoin. That's on a 144 chart. Let's have a look at the 1 day. If we've got anything there. Nothing there by the looks of it. So no sellers on the 1 day chart there. None on the 2 day chart. And none on the 3 day chart. So on the 144, actually happy with this to take a sell here. Now, although it says we've been going forward to the downside, we've actually had a couple of unconfirmed climates in the meantime. So we're actually on a more recent new start to the downside, shall we say. So let's have a look here and see exactly where we're going to put our numbers. So our entry will be 27,188.84. I'm just going to round that to 27,188. We need to be as specific with cryptocurrencies. I actually would prefer to be much more general, so we give it a little bit more wiggle room than we might others. The stop loss, 28,184.89. If you round that up to 85, what I'm actually going to do here is round it up to its closest 100. Now, the beauty of cryptos is that you can obviously trade 0.00001 of a coin, right? So you can have that wider risk without risking more money necessarily. Now, the wider the risk, the lesser the chance that you hit a decent reward to risk ratio, right? If I risk 10 pips, it's much more likely that I'm going to make 10 pips. If I risk 1,000 pips, much less likely the price goes in my favor by 1,000 pips. So that's the downside here. But I would always say with cryptos, we want to give ourselves a nice big buffer. So we've got 3 sets of sellers all stacked on top of each other here. We've added a little bit of room on that. In fact, if you wanted to be specific on this, just to be congruent with Bojan's crypto course here, what you do is you take 28,184.89, which is the top of that area, minus 27,188.84. That gives you 966. So, yeah, decent amount of pips. 966.05. Now, what you would do is you would times that by 1.2. So you give it a 20% wiggle room. Whatever that distance is, you add 20% to give it that wiggle room. So that's 1,195.26 pips, which you would, in this case, add to your entry to give you your new stop loss. So tell you what, let's be congruent with Bojan here. So it's, let's bring this in, do it all at the same time. So it's a BTC USD short. A few shorts we've done today. Entry would be 27,188 rounded. Stop loss is going to be 28,383.26. So the risk per coin, we'll work that out in a second because it's, I guess, per coin, that would be a reasonable amount there, which was 1,195.26. But again, you can risk percentages of that coin, right? You could risk $1, 19 cents, 20 cents if you round it up. You could risk even less than that. You could risk 1 cent. I've rounded it up to 2 cents at that point. So per coin, if you're trading one entire Bitcoin, then yes, that would be your risk. We're looking at 1 week and a 144. Safety target we'll figure out in a second. And our final target we'll also figure out in a second. So the stop loss was, let me bring that up again. And I'm just going to move it over here in my eye line. Okay, so the stop loss was 28,383.26. There we are, nice wide area there. Now our final target is going to be down here, which is 22,599.99. Let's round that up to 22,600. Alrighty, so I'm just going to add that in to our sticky note there. I'll bring this on the screen in a second. And then the safety target we're now just going to figure out. So if the entry is 27,188 and the stop loss is 28,383.26, if you want to risk $50, then you would be trading 0.04 of a Bitcoin, 0.0418 of a Bitcoin. Alrighty. To take profit, I'm just going to copy and paste this to make sure I don't type it wrong. For our safety target, again, same amount of pips that we're risking is the same amount of pips that we want to be making. For our safety target, always a 1-to-1, so that's 25. Interesting, 2599.2.74. Oh, yeah, we're fine. Sorry, I thought it was 2259 again. All right, so that's our 1-to-1. I was going to say that seemed to be really close to our second target, but I saw a 2, not a 5. So 255992. Say it again, 25992.74, risking $50. Again, we'll put it in for a month. And that's the first half in. Second half, I'm just going to update the safety target over here as well, by the way, just so when I bring it back on, it's all nice where it needs to be. 25992.74. The final target, so same entry, 27,188. Same stop loss, it's remembered it. Same risk, $50. And our stop loss here is, sorry, no, our stop loss, our target will be 22,600. So it's a 3.84 to 1 if it hits down there monthly. Okay, I'm going to put a nice little note in. So placed 12th of September, 1 week, 144 minute. And that is our third and final trade of the day, just in time as well, worked out. So that is our crypto trade. We're going short on Bitcoin, US dollar. We have our forex trade, right? So we've done 3 trades. Forex was our first trade that we placed, and we also had a stock trade that we have placed here. So 3 separate trades in 3 separate asset classes. We've used bigger time frames today, haven't done any day trading. I tend to be a swing or position trader myself. So of course I lean to show those because that's what I would be doing myself. Again, bear in mind with all of these that it is up to you in terms of risk to decide what percentage of a coin you're risking if you even place that trade. You might decide you don't want to trade Bitcoin at all. Fine. You might decide you don't want to trade the pound yen at all, or it doesn't fit your trade plan for whatever reason. I didn't trade the yen for many years because the decimal place was in a different point and it confused me. Not great at maths. I now trade the yen. I've got over that, but for whatever reason, you might decide you're not trading it. Fine, don't trade it. If it fits your trade plan, great. It's up to you to decide how many micro lots you would be using what risk you place on this trade. Same with stocks. For whatever reason, you might decide this stock is too cheap for you. It maybe doesn't line up with certain fundamentals that you use. Absolutely fine. Don't trade it. If it does align with your trade plan and it fits your risk parameters, fine, place that trade. And it's up to you to decide how many shares worth you're going to risk, how much capital you'll allocate to that trade. So that brings us to the end of today. I'm going to bring up our, now it sticks. I'm going to bring up this last thing here. It's the tradewithufos.com/Becky, so we can see there on the screen. From here, you can ask a question about a particular thing that you have a question for. If nothing pops up, you can ask your own question there. You can email me. That's becky@tradewithufos.com. You can do that. Otherwise, you can check out apps, courses, coaching, live trading, some of which are free resources, some of which are paid for. Again, obviously up to you to decide what works best for you. Otherwise, be safe out there, enjoy your trading, and I will see you next time. Take care. Bye.